explaining how you need to analyze a chart from top-down analysis. Simply in this video, it's going to be clear and it's going to be straight. We're going straight into liquidity, okay? Top-down analysis using liquidity, all right? So this is a daily chart, okay? The daily time frame. You can see from the top right, your left side to the top, you see there's a daily time frame, and from the chart, right, you can see that we have equal high right here. Like there's a liquidity right here sitting right here, and actually this place is also like our supply zone, right? Extreme supply zone. This is under extreme supply zone, right? And we got lower high, right? So we got lower low, lower high, lower low. Now this is a change of character, right? So this is actually the another end of the structure. Like the structure terminates at this point, creating an uptrend to the top. And the uptrend this week signifies the change of character to tell you that, okay, the uptrend is over and we're going to the down now. So in getting to the down part, we can see there's a high right here, there's a low right here rather, and there's another low right here. So immediately it touches the same low, okay, it creates, you can see this immediately this long engulfing candle touches this point, right? It sold to the bottom and creates uptrend for several days and before returning back to it. So basically what you need to understand in liquidity is that when there are orders in the market, okay, and there's a lot of push between the buyers and the sellers, it's either it's ranging or it's going towards an uptrend or a downtrend, okay? So when the liquidity is over, or the liquidity has been exhausted, that's why you see a change of trend. So when the two pairs, Euro USD, are strong at the same time, you tend to see continuation or you tend to see a ranging candle. Okay, don't forget that. All right, so from our daily charts, what do we need to do is that we need to just identify our usual way of identifying our total analysis, marking the key levels. Okay, you need to mark the key levels. So you mark the key levels, you mark the key levels. So when you mark the key levels, then you can actually say that, okay, I think I'm okay now with the trend, and let's see what we can actually achieve. Okay, just mark the key levels. When you're done marking the key levels, these are my key levels. I'm marking, okay, there's another touches here, another touches here, another touches here. So I can use that as my key level as well. I mark this area as my key level. Okay, I'm done marking my key levels now. Now I'm done marking my key levels. What do I need to do? I go to the smaller time frame, which is from the 4 hours, to see what has happened. Okay, remember I opened this fresh without marking anything, and now I marked, and you can see from the key levels I've marked, you can see the touches, great touches, number of touches, left side, the right side of it, touches. You can see touches on this side, touches. I never did this before. I'm just doing it. Touches. Okay, so we have series of touches in the 4-hour candle, right? And we already marked that in our daily candles, right? So now the area of interest. The area of interest is where is the most likely part or the most likely place that the prices tend to go to. Okay, where is the most likely part that the price tends to go to? Now, you agree with me that the price started ranging, right? Ranging from here to the stop here, and it stopped ranging at this point and pushed to the upside. Okay, now let me zoom this a bit so you can see clearly. Okay, going to the top, now creating higher high. It stopped the creation of the higher high and it reversed to create a lower high or a lower low. lower high, lower low, lower high. So now it's reversing from the uptrend, okay, from the uptrend, high, 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 low, to the top here, reversing, changing that, and creating a new trend, which is a downtrend. Okay, lower low, lower high, lower low, lower high. Now from this point, you can see that the structure has broken at this point. So this part, as this particular candle, has signified that this is the end of the trend. Okay, this candle has signified that this is the end of the downtrend, and we're pushing to the top. Okay, this is a formation of liquidity because you can see that series of candle touches almost at the same part here. You can see going to the top, coming here, ranging before pushing to the upside. So now, what you need to know is that after the ranging form, okay, we have the ranging form. Like in a normal supply and demand formation, you can say this is rally. Okay, this is the basis under rally. Okay, that's an uptrend. Okay, rally-based rally is an uptrend. Now, under rally to the top, going down, but it didn't touch this last part that the character has changed. Now, forming a new uptrend, a clear uptrend. All right. Now, I said we're looking for what? The PO high, that's the point of interest or area of interest, anyone you call it. The last candle, okay, that forms the upward push. The last candle that formed the upward push, this is the last candle that formed this upward push. That is your demand zone. There is high liquidity here, because if you look at the left hand side, you can see the ranges, and I told you the ranges forms liquidity. Ranges form liquidity. After the formation of this ranges formation here, you go to the top side, and it reverses to pick all the stop losses and all the others that are here. This candle, this bearish candle, reverses to pick all the others before moving to the upside. Now, I told you the last candle before the upward move, this is where your demand zone is. So I've already identified my demand zone to be here. Okay, extreme demand zone is this point right here. Okay, what am I going to do? I'm waiting for, and I can see fair value gaps right here. There's fair value gaps here. There's fair value gaps here. Okay, it's another zone that's likely to be tapped. So the price could sell to this point and move to the top. That's one example. Is that this is fair value gap. The price can bounce to this point and move to the top. But look at it, we still have a lot of liquidity at this part here, a lot of liquidity before coming to this demand zone. So the price can actually, this is the last candle before the upward move, okay, even touching where the key level is at. So you can actually shift this to the top so that it can be on a safer side. Okay, it can be on the safer side. So the price can actually come reverse to this demand zone because this is very extreme. All these are just, consolidation. This is very extreme demand zone. It can push to this part and take it to the top. We have fair value gap, we have extreme demand zone. What am I looking at? I'm looking at the price in a lower time frame to come and test this zone and move to the upside. Okay. Before that part, you can see these are ranges, and we have liquidity that are yet to be swept. So all these are also liquidity. Okay, it's also demand zone. They are creating a lot of liquidity. So many stop losses, so many orders, so many push. Other blocks, other blocks like that at this point. So what do? I go to the 1 hour time frame to see what has happened. Okay, good. From the 1 hour time frame, you can see. Remember, I didn't draw this in 1 hour time frame. I drew this in the 4 hour time frame, and I adjusted the rectangle to this point. Okay, the rectangle shape I adjusted it to the point, taking it up because it clashes with the key level we drew from the daily time frame. And I mentioned that this point is our fair value gap. Okay, this 1 hour time frame, you can see another fair value gap here in the 1 hour time frame. All these are not fair value gap because they've been tested. Okay, so now in 1 hour time frame, you can see you can have higher high, higher low, higher high, little higher low, higher high, extreme higher high, higher low, extreme higher high, higher low, right? Extreme higher high. This signals the end of the structure. The end of the structure now, when we reverse back to a downtrend, but we can't say this is a downtrend or not because it's still trying to range, so it hasn't broken this previous higher low. Okay, if it has broken this previous higher low, you can say that okay, yeah, it's actually it. But this particular one is our higher high, all right? So this is higher low. Taking it to this point to end the structure, that is the end of the uptrend, right? Before the market closes, down to this point. It hasn't broken this down, so we can say we are seeing uptrend. Okay, we are seeing uptrend. So in an hour time frame, I can use this also. I can say this is another push to the upside. So this is another block. Okay, another extreme demand zone in 1 hour time frame. This extreme demand zone is already filled, chart. This is already filled, so it's extreme demand zone. So what do I need to do is that I have 1, 2, 3, 4 areas that the price can actually come to test for a sell. Okay, so that I come to test here, bounce to the top, test here, bounce to the top, test here, bounce to the top. We have extreme liquidity at this point. So many amounts of money is sitting down here. A large amount of money is sitting down here. Liquidity is because the push to the top. So we have another test here. This extreme liquidity we saw in the 4 hour time frame. Liquidity, it can come to test here and go to the top. Or it can actually cross all through down. Right? It can cross all through down. You know, testing another level before going to the top. Remember, this is a ranging form. We saw this ranging form in 4 hour candle. Remember? This ranging form, we saw it in a 4 hour candle before pushing to the top. So the last candle that actually pushes the price to the top is where the demand zone is. And the last candle that pushes the price to the bottom is where the supply zone is. Okay, so in this chart, we can only see the demand zone, last candle to the top, another candle to the top. This fair value gap we saw in 4 hour, another candle to the top, these other blocks, right? Another candle to the top. So we are waiting for the candle, if we're waiting for the current chart to come in here to tap it before bouncing or crossing all through the 4 traps that we've set out. All right, so let's go to the 15-minute time frame and see clearly what's actually played out. All right, you can see this is the extreme demand zone we saw in the 4 hour, and it's actually happening also in the 1 hour. This is another demand zone, fair value gap we saw. This is another zone, right? And this is another zone. So what is the price actually doing now? We can say that the price is on uptrend from this zone to the top. 15 minutes. Uptrend from the zone to the top. So we saw this in 4 hour, right? Extreme demand zone in 4 hours. It actually appear in the daily time frame, but we only mark the key levels in the daily time frame. But in 4 hour, it's extreme demand zone. Demand, the price go up. Higher demand, higher prices. That's what it means. So the price moved to the top right here, move to the top right here. So we can see we have series of higher highs, higher lows, higher highs, higher lows. You know, this is a little ranging, you know, continuing the higher highs, higher lows, higher high. Then this is another higher high, higher low. All right, so now we can't say if the price is going to the top or not because it hasn't broken this. Okay, when it breaks this, that's when we create another higher high, and this is going to be our higher low. But it hasn't broken this at all, so we are waiting. What am I waiting for? I'm waiting for the price to either break this to confirm that, okay, we are done, okay, with the low trend, because this from here it has started going to the down, to the low trend, right? Creating lower low, lower high, lower low, lower high. So this is lower low. It hasn't broken this yet, so we can't say if this is lower low or this is just purely a change of character or a break of structure. So if this is a break of structure, we won't be able to know that until the market opens and in a couple of hours or a couple of minutes signifies that, okay, that's a break of structure. It's a confirmed break of structure. So what do we do as a trader? We need to plan ahead. We need to do our analysis. We need to make sure we open a trap for the price to tap into before grabbing our opportunity. So I've set out this, I'm leaving this till when the market opens. Of course, this is EURUSD, so it's basically for London session or European session. I'm not trading this when the Asian is open. So I'll wait for the London session and see if it's going to respect this or not. All right, so I'm waiting for the price to tap into this and bounce, or waiting for the price to tap into the next gap and bounce, or waiting for the price to tap into this and bounce. But when the price crosses into any of those boxes, it means that we are purely going down to the trend, and it's likely that it's coming to this demand zone. Okay, we have enough time to wait. Trading is 80% waiting, 10% buying, and 10% selling. If you want to make it in a trading, you have to be able to do that. Thank you so much. My name is Bashon. See you next time in our trading session.